Thank you so much for that introduction. Good morning, ladies and gentlemen. We're here to talk about the Sustainable Development Goals, SDGs, and what capital markets can do in terms of helping to implement them and helping to get them on the ground. The Sustainable Development Goals are a set of 17 objectives which were set out by the UN for implementation globally around the world. These objectives include things like no poverty, no hunger. They also include things like, developing business, developing infrastructure. Now, to some extent, they're like motherhood and apple pie. No one really can disagree with them because they're so worthy. But the question mark really comes around, where are we in terms of implementing them? How possible is it to implement them? And what can be done to speed them up? If we remember the predecessor to the Sustainable Development Goals, which were the Millennium Development Goals, MDGs, many African countries were unable to implement all of them within the time frame that was given. So what can capital markets do to make sure that this, or to help make sure that this is not the case this time around? I'll start by calling Princess to give us some background on, some more background on the SDGs, where we are in terms of implementing them, and also what financing requirements are needed in order to accelerate their implementation. Princess.
Quickly take you through the implementation of SDGs in Nigeria. The theme of this discussion today is Road to 2030 Agenda, which is known as Sustainable Development Goals, galvanizing domestic finance for the implementation of SDGs in Nigeria. It is very, very apt and strategic. The 2030 Agenda for Sustainable Development and Sustainable Development Goals are universal framework to end poverty, to safeguard the planet, and ensure that people enjoy peace, prosperity by the year 2030. Indeed, at the heart of SDGs is a promise to leave no one behind. Let me emphasize that the SDG built on the achievement of Millennium Development Goals as emphasized by the chairman of this panel between 2000 and 2015. While embracing new ideas in SDGs such as economic development, inequality, innovation, sustainable consumption and production, climate change, peace and justice. The 17 SDG goals are interconnected, interrelated, and indivisible. Often to sustain in one goal entails tackling challenges associated to another goal. But the achievement of these ambitious goals, we need to adequately finance resources, need financial resources to support countries to achieve national targets for the SDGs. Horizontally, the international community signed up to spend 0.7% of the world gross domestic product, approximately $500 billion annually on SDGs. But it is argued that even if all nations manage to raise 0.7%, this will not be sufficiently to realistically finance our common future. Globally, some estimate a gap of approximately $2.5 trillion annually to fund the implementation of this global agenda in developing countries. On the continent, a recent Africa Impact Report estimates that Africa needs $600 billion annually to achieve SDG by 2030. More than any other region in the world, Africa faces considerable challenge in achieving the SDG, according to the 2018 African SDG Index report. SDG faced more challenges in health sector, which is goal 3, infrastructure, which is goal 9, peace, justice, and strong institutions, which is goal 16, with more than 80% of 54 African countries lagging behind. Similarly, food security and sustainable agriculture, which is goal 2, energy access, which is goal 7, and marine ecosystem, which is goal 14, are also big challenges that need to be prioritized. Specifically, Nigeria is faced with the challenge of infrastructural deficit and ongoing humanitarian crisis, with the potential to slow down progress toward achieving the SDGs.
I don't know. I don't think so.
But as we speak, the government is working horizontally and vertically to guide and coordinate the implementation of 2030 agenda in Nigeria. And at the national level, we are working closely with the federal ministry, department, agencies of government to mainstream SDG into their respective sectoral policies and plans, with funding coming from their traditional annual budgetary system. It is pertinent to know that economic, social, and environmental dimension of SDG has been integrated into Nigerian Economic Recovery and Growth Plan between 2017 to 2020. At the sub-national level, we are guiding and encouraging the state and local government to also integrate the relevant SDG into their medium and long-term development plans. This is very important and crucial because that is where the problem lies. And that is a smart way to mobilizing domestic public resources for sustainable development. As we speak, we have done the baseline assessment at the federal level to map the existing poverty index and to also know the infrastructural deficit in Nigeria. We have also coordinated the 124 targets of SDG from the 232 targets globally. So we are in the process of second phase of the indicators, identifying indicators, and of course we are mainstreaming the SDG into the state national development, and to ensure that states prioritize SDG in their own peculiarities to be able to achieve SDG in Nigeria. We also launched the private sector advisory group in 2017, February, as one of the member states that launched the private sector to be able to mobilize domestic resources aside from the annual budget in Nigeria. As we speak now, the National Assembly is working on a fund for sustainable development implementation. It's at the committee stage. The first and second reading has been taken. We are at the committee stage to launch to have a fund as part of domestic mobilization for implementation of SDGs. And just last week, 2 weeks ago, we launched the private sector resource mobilization for the humanitarian crisis in the Northeast, galvanizing the private sector that have already existed in Nigeria to raise funds for the humanitarian crisis in the Northeast. And we have a large number of private sectors led by the former chairman and MD of Zenith Bank, Jimovia, Orlando, some banking sector, and oil and gas are in attendance to mobilize resources to support the humanitarian crisis of the Northeast. We categorize this also as a domestic resource mobilization. We are looking up to official domestic assistance, which is ODE, for the general mobilization, but as we are waiting for that to happen, we think that within the country, we can mobilize, aside from the taxes, we can get the private sector to buy in, we can legislate on the fund specifically for the implementation of SDGs. And this is what we are doing at the moment. And of course, we have the debt relief gain of $1 billion annually from the Paris Club. We started doing the MDGs, now SDGs. And that is what we are working on, though we have some challenges in the releases of the fund because it comes within the budget, the annual budget of Nigeria, the federal government of Nigeria. In recognizing the role of private sector in the socio-economic development of our nation, we are continuously catalyzing partnership with the key actors in the private sector in support of SDG in our country. We have since established the private sector, like I said, and they are working hard to see how they can mobilize more members to have good fund and to increase the participation while supporting the government so that we can track development as gains of SDG come 2030. Financing sustainable development is not just about mobilizing capital for specific projects and programs. It's about ensuring the private sector becomes adapted to financing the sustainable development by altering the way in which private finance operates so that its own processes are both sustainable and support sustainability in Nigeria. As we go on, we have the support of the donor agencies and development partners also, which we have mobilized together to scale up the support given to the Nigerian government and other African countries. So we've launched the donor partnership forum and the development partners also. And we have also launched, also last year, the private sector and civil society strategy group. The civil society strategy group are to monitor and to do the monitoring and evaluation of what government is doing and to look at it whether it matches what we are reporting so that we can have the third party to monitor what we are doing and what we are recording. I believe that working with this set of people, they can then benchmark us as what we said we would do, and if we are actually doing what we promised the people of Nigeria. I thank you for listening.
Thank you for that very comprehensive tour around MDGs in Nigeria. The question now is really what can capital markets do to move those SDGs forward across Africa? And we're having a debate as to who should go first, but I'm using my chairman's privilege to call on Sandy to give us his comments. And please, given time, if you can keep them as brief as possible.
Well, it's always a pleasure to be at a conference where the convinced is talking to the convinced. So at least you know you're amongst friends. But I have to say, the issue of sustainability always is like, and talking at a conference about sustainability, it's like talking to the Amen chorus. Everybody says yes, and everybody agrees. But I find it quite interesting that the Sustainability Development Goals Center for Africa says that more than any other place in the world, Africa faces sustainability and substantial headwinds in achieving its SDG goals, which is a bit disconcerting, I must say. I mean, the issues here are health issues, infrastructure issues, lack of institutional control, proper allocation of financial resources, which I think is, quite challenging. Obviously, some countries do better than others. Morocco, for example, has completed 66.1% of the SDG goals. Mauritius has done 64%. Somalia, on the other hand, is only at 36.2%. And Oscar, I'm sorry to say, and Princess, I'm sorry to say that Nigeria has only reached 48% of its goals. The average in Africa is 52.2%. So the question is how do we accelerate the process? How can we force or convince, maybe a better word, people to focus on these very, very important issues of sustainability. These are really critical. I think they're more than talking points. I think the word sustainability is actually correct. The question is the sustainability of our countries, the sustainability of our planet. I must say, I thought it was a bit ironic that when I woke up this morning and watched the news, that I can't remember his name, the President of the United States, I try to block it out. Yesterday, when asked about the U.S. government's report on climate control and sustainability, the President repudiated and said he did not believe the report of the United States government, which is a bit strange since he is the head of that government. But for those of us who are believers, we believe that we are really facing a crisis, that if we don't mobilize, if we don't put both our financial backing behind some of these issues, our will to sacrifice in a lot of ways, the will to make changes from certain kinds of fossil fuels to sustainable energy, to build the kind of infrastructure that's necessary, that is not going to be, and is going to be positive rather than negative. I think we are not going to leave a very good place for our children and our grandchildren.
Okay, Mohammed.
It's always good to speak after Sandy, but hopefully I didn't manage today to pick something on him and take it from there. But responding to your question, how can capital markets help in, I would say, galvanizing the finance for achieving the SDGs? When you look at the SDGs themselves, these are sectors that were usually dominated by public sector financing, by the government financing, and so on and so forth. And hence, the challenge going forward is how to convert a traditional finance sector by the government to a private sector or a public sector at large being financed. Having said that, the projects that usually being financed for achieving the SDGs is a wide array of targets, whereby we're talking about income equality, we're talking about poverty alleviation, we're talking, or actually eradicating poverty at its large, we're talking about infrastructure and so on and so forth. And these sectors, by their nature, were usually not that profitable, let's put it this way. However, there are cases whereby we have seen the liberalization of the markets themselves of these targets actually created tremendous returns, and hence it created itself, or it became a capital market adequate, I would say, investment in this regard. So basically, if we're still going to have controls, for example, on energy prices, in that case it would be very difficult to finance through capital markets, energy efficiency projects, renewable projects, and so on and so forth. If we're going to subsidize the transport, I would say, whatever means of transportation, it would be very difficult to create profitable opportunities for private sector participation in this area. So I would say one prerequisite for capital markets to be able to participate heavily in accessing or providing the finance for the different, or to achieve the sustainable development goals, it is the liberalization of markets and actually working from that perspective. If we want to subsidize, I would say, the less privileged, in that case you can go direct to cash transfers, you can go to different means when it comes to this area. This would be a prerequisite in this regard. Having said that, the second point that capital markets can support would be through the product offerings themselves. So if we're talking about projects that would require some long-term financing, it would be through long-term bonds and so on and so forth, the earmarking of specific investment vehicles and the distribution itself. But the problem with this, as we get to speak extensively, and we heard it yesterday, is the level of penetration of capital markets in either in emerging markets or in Africa in general, or worldwide, honestly speaking, apart from some limited number of countries whereby you would see the participation of the public in capital markets to be that significant. In our country, basically in our market, the level of participants in the market is less than 0.3% of the population, and this cannot be an area whereby you can rely on capital markets to finance significantly big projects that we're talking about. And hence, to be complemented, you have a role to liberalize the markets, you have a role to educate investors and ensure the level of participation in the capital markets is high enough so that when you come and provide them with the financing requirement or issuing the bonds, the stocks, the whatever mean that you want to raise capital upon, you find on the other hand investors that are aware of what is being offered to them and that they are participating in this area. And this point is not only to provide finance. If we're hoping for proper income redistribution and creating a middle income class that is quite different in 20 years' time, your only hope is through incremental saving approach through capital markets. So that would be achieving another target of the SDG of having proper income redistribution, creating a middle income class that is quite significant in size and wealth as well. Without this incremental saving approach and higher participation in the capital markets, I don't think we can achieve the SDGs going forward.
Thank you. Uche?
Yes. All right. Thank you very much. I think I'll keep mine a little bit more focused around what the Nigeria Sovereign Investment Authority is doing, because every time I look through the list of 17 SDG goals, I can't remember all of them, and I've been hearing about them for many years now, but I'll group it around 4 things. I think the first is I see an intersection between the SDG goals on agriculture, climate change, life on land, and zero hunger. I see them all connected, especially when I look at how it plays out in Nigeria. I also see the need for financial inclusiveness as a way to actually achieve some of these SDG goals. And I'll speak to some of the things we're doing and some of the things I believe the capital market can do to enable it. Obviously, infrastructure, education, healthcare, these are all very, very important SDG goals. But to be honest, we don't need this structured in the way it is structured for us to understand what needs to be done in our country. But more importantly also, I think what's important is for the capital market to see some of these SDG goals as not just social factors that governments should do. There is an investment opportunity in accomplishing some of these SDG goals, and I'll speak to them in a minute. So let's talk about agriculture, climate change, life on land, zero hunger, and all those issues. You know, when you talk about climate change to Nigerians, many of them, personally, I've been surprised by how little information there is. To the average person in Lagos, it's once in a while when it floods and you can't drive from Lekki to the rest of Lagos. That for you is climate change. But also when you go to the northern part of Nigeria, if I told you that climate change issues are at the heart of what is leading to insecurity in the northern part of Nigeria, many of you will never believe it. But you need to go visit. You need to go visit Maiduguri State. A friend of mine told me that in 1980, his grandmother's hut was 100 meters from the shores of Lake Chad. Today, it's a 3.5-hour walk between the hut and the shores of Lake Chad. What's happened? Climate change. Why? Deforestation. Why? Firewood. Why? Because 82% of people that live in the northeast of Nigeria use firewood to cook. You're talking about 8 million households. Every day, cut a tree, they don't plant it again. What does that mean for us? It means over time, a community that was many, many years ago, mostly fishermen, now became farmers. As the land became worse, the farming output fell. And then people that are breeding at the rate of 5 to 6 child per family end up joining Boko Haram. This is really part of the challenge. So when we talk about these things, it's not esoteric, it's not far out there. It's actually real and something that's impacting our lives every day. So ask questions. How is it that a country like Nigeria that flares the equivalent of 2 billion scoops of gas a day cannot afford to find a way to connect the investment opportunity in getting LPG to these homes in a manner that will actually end up stopping deforestation? There is an opportunity there, and people keep asking, well, what will the capital market do? Obviously, everything from gas extraction to gas bottling, all the way to getting this gas to the people's homes. That is point number one, and that solves many things. It solves climate change issues, it solves agricultural issues, and it solves the fact that we cannot actually live peacefully in our country. Let's move on to a few other things. Healthcare. And oh, by the way, we're working on this. We've worked on agriculture at the moment. In the last 2 years, the NSIA, through a subsidiary of it, has actually run just one aspect. We run the fertilizer program for the country. And for a while, people said to me, why are you doing this? Is it really what you're supposed to do? The truth about it is that there are just so many things that need to be solved that you cannot only all keep to your lane, you'll never actually accomplish anything in this country. In the last 2 years, we've been able to ensure that quality fertilizer is delivered, zero subsidy, and at the end of the day, it's actually quite sustainable. It can be done. There's no need for subsidy to make these things work. The reality is that we all need to sit in this room, apply our minds, and actually find a way to co-invest in making this thing done. And then there's all the conferences that come out of that. At the moment, we're in advanced stages of setting up an ammonia plant, again, using our gas infrastructure to create an ammonia plant to actually sell back to OCP, who actually sells us the ammonium phosphate, all interconnected. The point I'm making is this: there is an opportunity for the private sector, working with organizations such as ours, to look at opportunities in things that actually solve agriculture, zero hunger, quality of life, land degradation, as well as zero hunger. Second thing about climate change. If I told you that the second epicenter of climate change is actually at the moment between Ogun State and Edo State, many of you will not believe it. In 1982, there's 108,000 hectares of land between Ogun State and Edo State that was 100% forest. As recently as 2010, only 7% of the forest was left. Why? Again, people cut the trees, they make charcoal, they put them in a bag, they export them, they sell the lumber, nobody replants it. We don't need the UN to tell us a 17-point agenda to make our place livable. There are investment opportunities in forestry and reversing deforestation. These are the real sad realities of the things we face. Recently I drove from Abuja to Shonga Farms in Kwara State. Again, it's the same story across the country. Deforestation that is leading to high levels of climate change issues with possible investment opportunities, in my opinion, that I think we should all attack. Healthcare. Okay, so what are we doing in healthcare? Recently, we've when going to commission on January 15, the first three of our healthcare interventions with teaching hospitals. With Luth, at the moment, we are commissioning what we believe is a world-class cancer center. Well, I'd like to say so, but I'd like you guys to actually have a look at it and tell me if it is. Why is that? Because we found out in this whole country that there's really no working linear accelerator for cancer treatment in Nigeria. People go to Ghana for cancer treatment. People get on the plane and go to India for cancer treatment. How much does it cost to build one? We spent $11 million to build it. January 15, that gets commissioned. We're going to do 2 more of such, not cancer, but other areas of therapy with Kano and Umwa here. And then that's the phase of 13 of these investments we're going to make. Looking at some of these things, theoretically, we're looking at returns of about 13, 14, 15% in dollar terms on some of these investments. Again, there is an investment opportunity in some of these SDG goals. I don't like to call them SDG goals because when you talk about them, it sounds so far away, it sounds so esoteric. The reality is that these are the things that we have to do to make our place livable, but also there is investment opportunities in some of these things. Again, what can you do? Partner with us. Let me speak to infrastructure, and I'll speak to education, and I'll stop. We've been looking at infrastructure for a very long time, and when Andrew and I had worked on quite a few of these things, especially on the roads area, there were just so many instances on the roads projects couldn't get done. But recently, in February this year, the President created what they call the Presidential Infrastructure Development Fund. The PIDF, as it's called, is a fund set up by the Presidency but managed by the NSIA. This fund has now fully taken over Second Niger Bridge. We've just funded about $100 million in August to actually get that bridge done, and we're hoping that by the end of next year, the bridge section will be done. To wait another 2-3 years before the road is done. 2 weeks ago, we took over Lagos-Ibadan Expressway finally, started to fund it, and we're doing Abuja-Kano Highway. Again, these are symbols of actual connectedness in the country, and each of these projects, in my opinion, are actually investable. Finally, education. What are we doing in education? Education is a problem that cuts across the whole country in so many ways. But recently, the NSI, we want to start at the low end. We started at actually the primary school education. So we own 10% of Bridge International Academies, which is actually a superior curriculum for teaching children. So the test results coming out shows that children that go to Bridge are so far superior from those that go to basic schools. Edo State has now given over the entire basic primary education system to Bridge International Academies. Again, an investment opportunity which we think actually can show returns. So all in all, and then finally, just one more thing, and I'll stop here, Andrew, I promise you. On infrastructure, again, we both work together to create the infra credit. The role of infra credit, many of you know, currently it's still 100% owned by the NSI, but I'm hoping that other investors will come into it, is to actually bridge and create an infrastructure bond market for infrastructure to work. All I'm saying is that across the board, in each of these SDG areas, there's an opportunity to invest, there's an opportunity to actually make money, but at the end of the day, it's all about making our climate and making our homes livable. And I think that, without necessarily classifying them as things that are so esoteric, it's actually things that can come home and things we can all invest in. I'll stop here.
Good. Thank you. Do we have one, Sandy? I believe that Nasdaq, the market that you're the vice chairman of, probably dwarfs all of the African stock markets combined. What can we do? I think Uche has done a good job of sort of bridging the gap between the SDGs and making them into sort of real investments. What can we do and what can markets do across Africa to attract the investors that you have in your market to invest in the sorts of projects that...
Okay, well, first of all, let me say that, whether it's NASDAQ, it is really all the stock exchanges working effectively in consortium to try to make sustainability issues front and center in our sector of the financial infrastructure. I'm proud actually to be here in Africa because the UN program on sustainability and which also to a certain extent drove the World Federation of Exchanges, which Nandini Sukumar heads up. 2 out of the 5 initial exchanges that started it are here in Africa. The Egyptian Stock Exchange, the South African Stock Exchange. They were the first 2 of the 5 that started it. Brazil was part of it. And sadly, this year, you probably had the worst degradation of the rainforest in Brazil in history, which is tragic. NASDAQ and Turkey were the other initial signatories. So I think stock exchanges in a lot of ways are leading the way. We went back and when Nandini became head of the WFE, we created a sustainability committee. We don't have very many committees, side committees, but in fact, of that is the fastest growing, and of the 80 members of the WFE, 77 belong to the Sustainability Committee, and they work very, very hard, and we have our own list. It's not quite 17, but the fact of the matter is we're trying to establish baselines, we're trying to establish guidelines, we work with our countries. NASDAQ works very, very closely with all of our countries. We have our own internal goals. We plan to be carbon neutral. We do podcasts. We try to voluntarily get our listed companies to report. We have 500 that do it well out of our 3,500, and another 1,000 does it okay, but 2,000 aren't engaged at all. So it really raises the question. I think stock exchanges can raise the flag, but it can't drive, and it can suggest public policy, but it can't drive public policy. We are working, the WFE is working with IOSCO. They are the regulators. If the regulators speak, everybody else follows. The question is voluntary versus mandatory. And I think that these sorts of issues and that kind of debate has to be a serious one as to whether or not, if we're looking at 2030 as a benchmark, whether or not how far you can go with voluntary standards as opposed to mandatory standards. I have my own sustainability goals. I hope to be around in 2030 so that I can see how the rest of you have performed. To that end, I have lost weight. I exercise. I try to get more sleep. I fail at that. But we all have our own sustainability goals. The difference is my doctor said that for me, and it isn't all, pure. You have to make compromises along the way. Developing countries have, Africa has its own challenges in terms of attracting capital in. I would say the balance there has shifted. In the old days, people were afraid of sustainability standards. They thought that would be an inhibitor to economic growth. I now see, and we see at NASDAQ, that there more and more, a greater percentage of both listed companies and finance comes to companies that are in fact sustainability conscious. So I think it's good. Trade-offs are always part of the game. It's always part of any negotiation. I used to be the state negotiator, labor negotiator for New York State, and I used to explain the origins of collective bargaining, which, by the way, started with Moses. Moses went up, he negotiated, he came down, and he spoke to the committee, and he said, I have good news and bad news. I got him down to 10. Adultery is still in.
So I think we have. Okay.
I just need to comment on one point here.
I hope it's not about the adultery.
Sorry, it's not the point mentioned here has to be reflected as well with investors, because the study that conducted by the WFE to be published next week, number one factor for investors to look into emerging markets is returns, is not sustainability, is not corporate governance, is not anything. It's only about returns initially. Maybe afterwards they would look at sustainability and governance and so on as a secondary target. But this has to be reflected as, or at least investors should show emerging exchanges, should show markets and so on and so forth, that this is one of the factors that they have to look at, or they are looking at the very much beginning of their investment assessment.
Let's take a couple of questions from the floor. I'm told that we've been given a special dispensation, so I don't know if anybody has any questions. Please keep your questions very brief. We're really tight on time. Oh, okay. I had one question, and I think Princess also wants to say something. My question was really for Mohammed. I will give you the closing remarks, Princess, if you don't mind. My question is for Mohammed, which is the following. I mean, I think it's a general principle, agreed principle, that if you pool funds, in terms of risk management, in terms of diversification, you tend to get better outcomes. How can we as Africans and as African exchanges work together more? I mean, I don't believe that I can easily list my company on your stock exchange. Maybe I'm incorrect. I'm not sure how easy it is for me to get, Egyptian investors into projects here, and also vice versa. But I believe that if we can mobilize more domestic savings, that can also help to accelerate the process. So what are stock exchanges really doing to promote these intra-African, cross-border flows of investment?
Look, I have two opinions here. The first one was before having sufficient technological advancements by brokerage companies, I would have said that exchanges have a bigger role to create this, I would say, intra-trade amongst the various markets and amongst the various investors. However, with the development and the infrastructure development of brokerage companies, I mean, I see one of the boards outside is about an Egyptian, the prominent Egyptian investment bank, EFG Hermes, is here presenting themselves, and I think they are present as well in the Nigerian stock exchange or in terms of trading. So the role of promoting the intra-trade investments usually currently is falling on the shoulders, honestly speaking, of investment banks, brokerage companies, and so on and so forth. Having said that, we at Asea are trying to create the interlinkages when it comes to trading and think about areas whereby it can improve the trading aspects in this regard. However, it is difficult to decide on with this technological advancement that brokerage companies nowadays have, and they can overcome the hurdles in this area.
So moderator, Uche wants to make a very quick, 10-second intervention, and then we'll give the floor to the Princess to wrap up.
No, I think that with regards to what roles exchanges can play, and obviously everyone knows what roles exchanges play, from improving governance to price discovery to actually pooling capital. And I think that one of the things I've always argued has been that some of the privatization programs and some of these infrastructure projects we're working on will end up getting listed on the exchange. It's only when it's there and there's transparency to what they actually do that I think capital will come in. But I think that a country of our size, the biggest role I expect of this change is to be that room that pulls all capital together. A pension funds is an outlet. We need to put some of the stock of the things we're working on the market. And the encouragement across the board is the government needs to put some of these things that we have on the market, let people participate. It's the only way for exchanges to play a role. And I think that this is one of the things that we've worked on. I'm hoping that the exit for investment on things like Lagos Ibadan Expressway is to put in the market and have people investing in it. And I think this is the only way we can have an inclusive capital market environment. With 200 million people, it's not really useful if at the end of the day we don't have a way of pulling everyone together into a place that we can make that capital work efficiently for us. That I think is the role the exchange will play. To the exchange, I think is also making sure that, number one, you avoid scandals, make sure governance is very right and governance is very strong, but also some of the listing requirements, and I know you're working on making them easier for some of these entities to come on. There are quite a few of them that I think, and I'm hoping that before I leave, I can actually list one of them on the exchange, but it depends on whether I leave tomorrow or not.
Andy.
Okay, Princess.
Thank you very much. I think the United Nations made this the Sustainable Development Goals more friendly, more accessible by allowing the member states to prioritize the agenda into their own peculiarities. So you don't have to do the 17 SDG goals at once. And to make it very simple, as said by my brother, is to dimension the goals. The 17 goals comes in 3 dimensions. 1 to 6 talks about social development, 6 to 12 talks about economic development, and 13 to 17 talks about the climate change, peace and justice, and our environment. And I believe that the government of Nigeria has done very well by making the ease of doing business more flexible, more interesting. And what we are saying here is to invite the private sector, and that the purpose of establishment of the private sector as advisory group is to work with government, work for government, and work for sustainability of their business. So we want the private sector to work with us. And in doing that, we have also made visa, point of entry visa for foreign investors. And of course, we are providing tax holidays also, and we are ready to do the PPP, the private-public partnership. And we are ready to, about 6 months ago, we are looking at the possibility of putting all our infrastructure on the market for investors to take up and work. That can work if the private sector is willing, because the infrastructure grab is so long, but in the last 15 years, we have not done so much. But in the last 3 years, we have done relatively well in that, and we are ready to partner with the private sector. And that is the essence of my initiative, by making the mobilizing the private sector to work with the government to see what they can do to make their business more interesting. So there are a lot of opportunities, a lot of flexibilities, as well as what the government can do in terms of tax holiday, providing infrastructure. If you have a project to do, but every project that the private sector does will have positive effects on how we achieve the 2030 agenda. And I don't agree with my brother saying there's no profit. There is a lot of profit, if only we can channel our investments and resources productively and making a sustainable business. So the government is open, and we are ready to work with you. We are ready. We are very flexible in everything we are doing. And if you come up with any ideas, we are ready to take it on board. And that is why Goal 16 is very, very flexible. We are doing well on security to protect your investment, and also looking at the laws where we can make it flexible to guarantee your investment and high return on your investment. Africa is open for business, and Nigeria is open for business. The private sector is welcome. You are welcome, and you are welcome to work with Nigeria government. Thank you.
Great, thank you very much. That's a great message to end this thing on. It's also music to my ears that the government is planning to privatize, sell off some of its assets onto the stock market, because we know that really capital markets investors are not really best suited for greenfield projects, but they're very good for recycling capital that has already been invested into other projects to allow those new projects to come up. So I think there hasn't really been any privatization in this country since 2012 or 2013, when the power sector was privatized. And so I'm very glad to hear that more assets will be coming onto the market, because that's what markets are for.
Can I just make one point? We often look to the heavens for salvation. I think that one of the things which we should be looking to the heavens for are clouds. Because I believe that in order to attract investment in order to facilitate the infrastructure necessary for investment, particularly in places like Africa, the developing world, you have to be able to have easy access. And you also have to have product. And the ability to aggregate product of exchanges and yet have the exchanges sustain their own independence. The ability to attract capital without having to build additional kinds of telecommunications and banking infrastructures is through the cloud. Within the next 5 years, it is going to revolutionize, literally revolutionize how business is conducted. And so once again, I think we look to the heavens, in this case the cloud, and I think the cloud kind of technology will be able to have that kind of connectivity, that kind of interaction and consolidation without the loss of identity, but with the ability to aggregate some of the most extraordinary assets that Africa has. So I think the heavens again is the salvation.
So now we've gone from earth to heaven in terms of this. It's amazing that we started off in violent agreement about the SDGs and their motherhood and apple pie, or apple pie and motherhood. I'm not sure how the expression goes. And yet here we are, we've run out of time. There's still so much to say. But I just want to thank all the panelists for their very thoughtful comments, and you, the audience, also for listening to us this morning. Thank you very much.